Jeff and I introduced a new name, Emerson. We had some fun too. And I think that you got a lot out of it. We talked about the 5 things we've done wrong, the 5 things we've done right. And all of these things come into play when you're looking at something like what happened today, when you get certain numbers and the numbers look negative and the numbers then spell trouble. People panic. And yet at the same time, Jeff, the numbers that we might be looking for.
Yeah, and you're speaking, of course, of the S&P Global Flash PMI data. It came in much weaker than expected. It's quite extraordinary. The fall in activity was the fastest for 4 months, amongst the quickest in the series history. That's dating back to since October 2009. Manufacturing down the fastest since the lockdown. I think services fastest down the lockdowns too. So it's very discouraging from an economic standpoint, but from an inflation perspective, there's bright spots.
Right. And I think you left out the one thing I thought that was most important that you showed me, which is that pricing power is shifting to the buyer from the seller. So the seller, you buy an apartment for $1 million, you try to flip it for 1.1, that may be over. If that's over, that's really good for the Fed and inflation. Now, a lot of people look at the 10-year and say, wait a second, the Fed's going to throw us a recession. A lot of people look at the 2-year and they say, the Fed, there's going to be much more rising. I urge people to think quite differently. I urge people to look for data like we just mentioned. And that's data which J-Powell sees. And remember, what J-Powell wants to see is not better than expected. He wants this, which is all that really is relative. Mm-hmm. He wants absolute, which means things are down versus last year. These are down.
Yeah, I just want to clarify real quick what I said. So services was the fastest fall in activity in 4 months. Manufacturing, the downturn was the fastest since the initial lockdown period.
Now, oil is selling off. You and I both are struggling with when to buy more oil.
Yeah.
Not sell it. I still feel that we can wait, but not that much longer, Jeff. Yep. Not that much longer, because what's going to happen, West Texas just spiked from 69 to 75. That was a bogus spike. I didn't buy that spike. But what's going to happen is you're going to have companies that at $70 still do well. And now people are going to say, well, wait a second. I don't want to be in those because the earnings are going to be down versus last year. And what I urge people to realize is if you can buy a stock all the way down that yields 8, and it looks like oil can stabilize, well, that's much better than you can get from any fixed income.
And 70, of course, is where the Biden administration has said that they would look to refill the strategic petroleum reserve. Now, they might be incremental buyers versus, a large buyer trying to move the price, but it's a notable level for sure.
But we sold so much in the high 60s, right? And Devin, we sold in the 70s.
But we've sold higher, we've bought back lower.
Well, but we're buying back gingerly. We're not buying back all at once. Now, I will come and tell you that at $59.80, if it went plain 59, plain is the term we use for the actual flat, or 59 flat, then I'm going to say, look, I think we have to buy some. We sold some at 69. Let's buy back that at 59.
Yeah.
Now, Halliburton, we just sold 3 points ago. I don't want to buy any of that. Pioneer 210, they were buying a lot of stock. I would say to you once again, let's buy some Pioneer. Coterra, I'm waiting to speak to Mr. Jordan from Cimarex. But this is 210 is where Scott says you should be a buyer, and I am with him. So these are stocks that I find very compelling.
Yeah, and maybe if we could just turn back to a look of the broader market. So the market was not yet oversold yesterday per the S&P oscillator, starting to follow that again, minus 3.54%. So it's getting close.
Cash, and look, you can't anticipate it, but I think you all can recognize with the direction.
Yeah, and but we do have plenty of cash on the sidelines, about 12.3%. So, Jim, as prices start to come in, I would assume we're looking to
when we're going to buy some Emerson if it keeps going down because we're very small. Try to look to rebuild some of the stocks that we sold that we really, really liked, that we sold and felt that it was the right thing. I question whether AMD isn't the right time. Or I'll tell you one thing, I think that this is right. Now, I mentioned it on air. Mm-hmm. I think that CRM at 120, after watching what Adobe did today, Adobe had 15% growth and people suddenly love the stock. I remember when it dropped from 20 to 19% and people cut the stock in half. So Salesforce, I think, is one that I'm looking at. I'm eyeing to be able to make the acquisition.
Keeping with the big tech theme, JP Morgan says now's the time to buy Meta. They upgrade their rating to an overweight rating. They raise the price target to 150. 5 factors behind the upgrade: increased cost controls. We've been looking for that. An easing year-over-year impact from the Apple privacy issues, lapping some of the heaviest TikTok pressures, valuation compelling, Reels monetization improving.
Remember, TikTok is booted in this country. It starts a bit. Now, I'll tell you this. Right here is when he decided, you know what, Mark being, let's fire all the people we don't need. Now, that was gutsy because a lot of firms have to do the same thing in Silicon Valley, and they haven't been willing to take the medicine. He has a lot of extraneous people.
All right, guys, let me just jump in here. We'll get back to Jim Cramer and Meta Platform, but you can see there is an opportunity in oil. If you could buy some more oil, we know Coterra is down. As Jim said, he's waiting to talk to the CEO of Coterra. And if you was in my Patreon, you would have listened to that monthly meeting yesterday. But he says that he's willing to talk to them before. But I still like PXD, which is Pioneer Natural Resources. I love that stock. I still think that Starbucks, as China get ready to open, it will be a great stock to buy. And as we says, I just even bought some more Emerson. I bought that stock yesterday, and I bought a little bit more today. Guys, you don't want to buy everything at one time. I bought like 25 shares, and this morning I bought like another 20 shares because the stock went down. So it's very good to buy stocks in portion. If you want 100 stocks, you don't have to take your money and buy 100 stocks at a time, but you could buy them in pieces. And when it go down, your average price is going to go down, which I'll be doing a book soon talking about that. But let's go back to Jim Cramer and Jeff Marks with the CNBC Investment Club while they talk about Meta Platform, formerly known as Facebook. And let me see what more we could learn from Jim Cramer and Jeff Marks from the CNBC Investment Club.
Make Instagram work better, and he's spending 20% of the time on the metaverse. But I agree that this thing could make a nice comeback, but that's also because it was the worst performer in the S&P. So that's a snapback. That's not going to be like Alphabet. Alphabet is not the worst performer in the S&P. No. Apple, some more positive commentary. As I said in the conference call yesterday, I don't expect Apple to make the quarter. I do expect that Apple could make a pre-announcement. No need to be able to sell and then buy again, though.
Right, because it's just too hard to try and trade out of in and out of a stock like Apple. Sure, maybe you can sell it at 135, but when you buy it back 128, it's too
I don't
hard
like trading Apple. I've been right on this thing and trading Apple. Now let's go over it's the wearables. Let's go over Eli Lilly. I want to make sure what I'm saying. What I'm saying is they have a drug that can lower weight. Now it's a drug for diabetes. I'm saying that there'll be doctors. You may think that they're inappropriate, but will give you the drug. You can join the trial for obesity. But that my experience with drug, unfortunately, I've had a bunch of things that I've had to take and been in trials. And if there's a great medicine out there that really helps you, you can get it. Mm-hmm. So I think that what's going to happen is people who are very obese are going to be able to take that drug. I think that otherwise you have to find a doctor and say, look, I'd like to be in the study. But what I'm really emphasizing is that obesity is an epidemic, and this is a medicine for an epidemic. And the FDA does not like epidemics. If you take a look at your box for your test that you might take for COVID, you'll notice not authorized by FDA. It's just emergency use. It'll be like emergency use if you get it for COVID.
Yep. And the news today, Leerink, they increased their price target on Lilly to $410. They boost their 2030 revenue numbers based off of the 2 potential diabetes and obesity blockbuster candidates that they're putting through a phase 3 trial that was announced earlier.
And then once again, people this time it's a catch up. Estee Lauder. Estee Lauder, I think, is the premier way to be able to play the reopening of China. Now, once again, China is not going to tell you. Here's the story you're not going to read. China's now COVID-free because everybody's had it because they didn't handle it right. Mm-hmm. We don't have any natural ability to stop COVID. What you will hear is that COVID burned through the country in 6 weeks, and suddenly people will be buying the heck out of Estee Lauder. Estee Lauder is a company that does not thrive under masks.
So this is a situation where you want to buy the stock before the good news happens.
Here, I'd buy some here. Let's say you wanted to have 200 shares. I would buy 50 here, and then I wait to see if it takes that out and buy 50. And if it just kind of hangs there, then I buy another 100.
Yeah, and of course today Atlantic Equities, they name it a top pick for the first half of 23. They raised the price target to 302. I believe that's a street high. They do point out they expect shares to be volatile. It was volatile yesterday. There could be one more sell-off if COVID rips through China. That would be a negative headline. It often trades on those China headlines, but of course that'd be such a great buying opportunity.
Right. I mean, seeing it for Nike too, Apple, but the one I feel the most close to is Estee Lauder because it's run by Fabrizio Fraser, who's just a fantastic consumer products person. Now, I just think I woke up this morning very down. Why? Because I was up at 3:30. Because there it was, futures trading down, everybody's bad, everything's bad, and I'm working on individual stocks and seeing things like Adobe and saying, "Well, I think Adobe's not bad." And then I come to work and everyone's just talking about like what's bad and individual stocks don't make any sense. We have a club, and the club is about trying to teach you how to find the individual stocks. Like what my father came back from the war, and there was a fellow by the name of John Paul. My father was a jobber. He sold boxes, he sold whatever he could, boxes and bags to retailers. At one point, he was selling paper towels and selling flatware, plasticware to people. And he went to John Paul, and John Paul had this office at 5th and Bainbridge. He's from Philadelphia. And John Paul's long since passed. But he had bought Merck every month. He'd come home from the war, where he was a colonel in the Marines, which means he's pretty high. And he bought money. He bought it every single week. He bought some. And then it ended up being a lot per month. And when we would go to him, my father would say, "We're about to meet a multimillionaire." And I'd say, "Well, who is it?" And he said, "Well, it's John Paul." I said, "Come on, John Paul's place is like your place, Pop." He goes, "No. See, what he did was he put money away into Merck every month. He tried to put a little each week, and he became a multimillionaire." And I always said to myself, maybe one day I could be a multimillionaire, and maybe one day I could help others be a multimillionaire like John Paul did when he showed me how to do it. And that's why I like the club, because I saw John Paul, a jobber, back from the Marines, World War II, just finding a stock he loved and buying it.
Speaks to the power of compound investing and time in the market. Absolutely.
Yeah, he's not worried about the S&P and trading it and algorithms.
Invest what you can, of course.
He just looked in, found a stock he liked. It was called Merck Sharp and Dome. And he said, "Jimmy, find a stock you like and put a little away." And here I am, 60 years later, telling you about John Paul, who was a multimillionaire simply because he put a little money away into Merck. So forget the algos and think of John Paul and Merck.
All right, guys, I wanted you to hear this story, man. I thought that this was a very, very touching story, so I didn't want you guys to miss it. I want you to understand how you could put away a little bit of money, as Jim say, and you could get rich over time. I just want to recap some stocks we want to talk about, guys. He did talk about Meta. I'm still not sold on Meta right now. I mean, it's rough. It's a rough stock. And it's up 4%. We wouldn't buy things when it's up 4%. But I want to talk about stocks that I like. I know you talk about Estee Lauder, but I still prefer Starbucks. I still think Starbucks is an inexpensive stock, like $98, a nice dividend. So consider Starbucks. Consider, guys, look at some oil. You want to look at companies like Coterra, PXD, Pioneer, and Devon. As Jim was saying, you could buy that at 59. Still like Alphabet, guys, and Facebook. I can't stress it enough. If you're not into Facebook yet, guys, look at Facebook. Consider buying some Facebook. It is a hard stock to kind of monitor. I think it's in the 130 right now. I would get, if you're going to buy like 20 shares, guys, I would get at least 10 shares out right now and wait and see if you could get some more. But Facebook, you cannot go wrong with Facebook. I mean, Apple, you cannot go wrong with Apple. So consider buying some Apple. I mean, buy some Apple, okay? Buy some Apple today, guys. Go and buy some Apple. It will go back up. You get a nice dividend, guys. If you could buy some oil, consider buying some oil, but you have to buy little and see what the market do, then buy more. Anyway, guys, if you're looking here for the first time, please consider joining my Patreon. There is so much more than just the videos on Patreon, guys. And please subscribe to the channel. We love the feedback. We love the comment, guys, and let me know what could we do better. Anyway, thank you for watching the video. Please don't forget to comment and subscribe. And I'll see you on Monday when we give you more content.